Hello everyone, I hope you're all doing great. This is Kavya Ravichandran. I'm here to provide mentorship program for all the ACCA students out there. Today in this session, we're going to learn about a very important concept which lays the foundation before you start your financial reporting as well as your financial, strategic business reporting. So we're going to learn about conceptual framework, which technically the basic foundation for even the standard developed, which is by IASB. So, ma'am, what is conceptual framework? It is going to be nothing but a set of theoretical principles which will be together, and based on that, you can expect to have few standards which will be developed on that. So now, are we going to learn about all the concepts? Not necessarily. So, since you guys are going through financial reporting and SBR, only relevant concepts are important where most of your standards get repeated. So let's start with the very basic concepts. Like you can expect to have 6 to 7 concepts that you will be reading. So let's start with the very basic one, which is called as your separate legal entity concept. So now most of us have an idea saying that what is separate legal entity concept. It is not for the first time that if you are listening, if you come from a commerce background. However, if you are listening this for the very first time, so we just assume there is a multiple people who have gone ahead and started the business. Assume these are all human beings. I know they doesn't look like a human being, but just assume. Yeah. So multiple group of people are starting a company. Okay. So these people have started an organization. Yeah. So let's take this as a company. I hope it looks like a circle. It's okay. Yeah. So let's imagine these people have started a company. Now, these people are treated as what? Treated as shareholders. So the ultimate owners of the organization will be nothing but these people will be the shareholders. But when I move to the other side, like then, ma'am, who is gonna own the organization? I mean, who is gonna run the organization? So imagine this is an organization. I'm not saying this has to be an organization. I'm just saying, imagine this is an organization or a company, a building, right? Who will be managing this? This will be managed by board of directors. Now, the board of directors, are they permanent? They are definitely not permanent. Yeah. So the position is permanent, but the members who work on this will be temporary in nature. So the board of directors, the position is permanent. There won't be any change in the position. CEO, every company will have CEO, but let's say the CEO will not be the same person as we have seen in the previous. For example, let's take any big organization. The CEO will keep changing. The position will stay permanent, but not the people on the position. So now let's say there is a problem which has happened to the organization. अगर कुछ problem हुआ, or imagine if the if the let's say rewards, instead of taking problems, not every time we're gonna expect problem. Let's say, take an example, Asian Paints. See, the best, I'm just taking an example, I'm not giving you the real life example, real life case studies. So imagine Asian Paints wins the best award. Who do you think will collect the award? Do you think they will collect, the board of directors will collect, or the shareholders? So you will go pause it and then Google it and identify and tell me. The board of directors will collect it, not the shareholders. Why? Because see, anywhere that you see, the company will be treated as what? The company will be treated as artificial person. So this person might not have a physical existence. Why? Because an artificial person is someone who don't have eyes, who don't have legs, hands, just like the way how we have. But provided these people are going to do what? Like, the company, the people who are involved in this particular artificial person will represent that artificial person. The best example here is board of directors will collect the reward. Similarly, will the board of director be the same person every year? Not required. It can change depending on the organizational requirements. Now, what is artificial person? See, this company will be treated as what? This company will be treated as a separate legal person. It will be treated as artificial person under the eyes of law. If anything goes wrong in the organization, see, let's say artificial person, this can get into agreement. An organization can get into agreement. The authorized signatory, man, that means like who would sign it? Board of directors. Any respected person relevant to that contract will sign the contract. Let's say a company might also have to go through what? Might also can go through few cases, like there is a chance where it can sue anyone. At the same time, it can be filed by somebody, anyone. So anyone can file a case against the company, or company itself can file a case against somebody else. So under the eyes of law, company will be treated as what? Company will be treated as one of the artificial person. So any concepts that we take as a foundation, it is going to be what? It is going to be saying that a legal entity is completely different from the owners. So what does a separate legal entity indicates? That a business organized is recognized as an individual under the law, independent of its owner. Something happened, wrong thing happened, let's say recently, not recently, very often we see Maggie has been filed a case against by somebody, or there was a 2 years back there was a case against Mintra. So all of this are done, the owners will not be involved, because the owners will not be liable what the company does apart from their investment, right? So that is the main concept that we have, which is a very basic and understanding concept of your conceptual framework, separate legal entity concept. Then comes an important, so little practical aspect of it, matching concept. See, before I'll showcase the matching concept, let's have an understanding. Imagine I purchase 1,000 pens for $10 each. So what will be my total purchases, people? My total purchases are gonna be 1,000 pens into $10. It is gonna be $10,000. Correct? Yeah. And at the same time, see, when I purchase, I'm definitely gonna purchase it to resale, right? So I sold 800 pens for $15 each. So what will be my total sales, people? My total sales here would be 800 into 15. I'm sure it is going to be $12,000. Now, if I ask you guys what is the profit, don't come up with an answer saying that it is going to be $2,000. So again, I'm telling you, pause this video, use your brain, calculate and find out what is the profit for this particular example. If your answer is coming up $2,000, I want you guys to rethink about it, and then again pause the video and find out your answers. So I assume you might have paused the video and coming back to me to identify what is the answer. See, the answer is not going to be $2,000. And somebody who got $4,000, trust me, you guys got the concept. And that means somebody who has not got the $4,000, that means they don't understand. They do understand if you listen to this. See, what is happening here? I, as a person, purchased how many pens? 1,000 pens. But how much did I sell? I only sold 800 pens. So we do the simple concept. What is the selling price per pen? The selling price per pen was $15. Cost per pen was how much? It was $10. So technically, what is the profit per pen that you can expect? Profit per pen was $5 each. So how many pens that I have sold? I have sold 800 pens multiplied with $5. That makes my profit how much? That makes my profit of just $4,000, not $2,000. So this talks about what? This talks about matching concept. What is this? Like, I am not getting. I understand 800 pens, but why am I not taking $10,000? See, understand how much is sold. The sold pens are only 800. What is the remaining 200? It is nothing but unsold pens of 200. First of all, this unsold, has it generated a revenue? You should always ask a question. Has this expense generated any revenue? First of all, did we sell this? The answer is no. So if we have not created a revenue, we cannot match with expenses. So don't match with expenses. That simple is it. Don't ever match with the expenses. It is going to be very simple. So ma'am, that means what do we have to consider? We have to consider our sales would be how much? Our sales is going to be $12,000. My purchases is not going to be $10,000. My purchases is going to be 800 into 10 only. That becomes $8,000, which gives me my profit how much? Which gives me my profit of $4,000. So this says you can only recognize recognize, only reduce the expenses if you have gone ahead and generated revenue. If you have not gone ahead and generated revenue, it is not worthwhile, or it cannot be reduced as an expenses. Rather, we showcase this as what? Unsold goods of $2,000. That is what the matching concept clearly says, which is very important from your exam point of view. Why? Because most of the standards, let's say we calculate even depreciation based on matching concept. When an asset is used to generate economic benefits, it is better to reduce the value of the asset through the concept of depreciation. So when we do IAS 16, you guys will have an idea. But read matching concept. Matching concept clearly says what? The revenue has to be matched with the expenses which is incurred to generate the revenue. Otherwise, you are not supposed to reduce it. That is what matching concept says. Hand in hand, we also have accrual concept. So if you understand matching concept, you will also be understanding accrual concept. Now, what is accrual concept? Is it different from matching concept? You see, it is not different from matching concept, but it is quite easy to understand in real terms. So let's take two point of view. Imagine the first point of view, I am a tenant, or let's take I'm a salaried person. Instead of tenant, let's take I am a salaried person. I am a salaried person. So my salary, I'm just giving you guys an example. My salary, I work for a company where I'll get paid. My salary date will be 5th of every month. Now, imagine if I join, guys, my date of joining will be on 1st January 2025 for our understanding. What do you think my first salary date is going to be? My first salary date is going to be 5th February 2025. Do you guys agree? Right? Yeah, 5th February 2025. Now, understand. So, but see, I'm getting paid when I'm getting paid. This is the date my accounts get hits with money. But which month the salary is it? The salary belongs to 1st Jan 2025. The salary will belong to what? Salary belongs to January month, not the February month. Correct? Same concept, accrual concept. See, you have earned the money when? You have earned the money for the month of Jan, not for the month of February. Correct? Yeah. If you have earned for the month of Jan, I will take this income for the month of Jan only. So if you guys are, most of us like will be considering, what most of us will be considering, filing a tax. Now, let's say now I'm uploading this video approximately during the first week of April. So the last March year end, like even though you're earning for March, maybe you get it in the month of April, but still we tax it for the month of March. Same concept accrual. See, income earned matters. Whether you have received or receivable doesn't matter. You have received the income or you have not received the income, don't worry about it. Have you earned the money? That was matters. See, for the month of January, if you move to 31st January, I'm sure you wouldn't be getting your money. But still, you will say, Jan month, I have earned 1 lakh or 20,000 or 40,000, 60,000, depending on your salary that you're getting. So the same concept you apply in an organization. What is an organization? Let's say I have made sales of how much? In this example, we have made $12,000. Okay, for the year Jan 2025 to December 2025. Let's assume that way. Okay, so now Jan 25 to December 25, how much we have earned, guys? We have made a sales of $12,000. Okay, in that, let's say we have received and receivable. We have not got few money. Somebody would have taken it for credit. We have received a 7,500 and it is still receivable would be 4,500. Now my question is, How much will I consider that as my sales? See, irrespective I have received or not, for the year period of Jan to December, how much is my sales? My sales are $12,000. Have I delivered the pens to my customers? Yes, you have delivered the pens to the customers. If you have delivered the pens to your customers, what would you consider this as? You would consider this as your sales, no matter whether you have received or receivable. I do not change my sales value to 7,500 or 4,500. I will keep it till $12,000 only, no matter what. This is about what? This is about income. What is important for you guys to write down or make a note about this is going to be very simple. Income earned. See, whatever I am highlighting, that is what matters a lot. Income earned is what goes to statement of P&L account or for the calculation of profit. I don't worry whether I have received it or not. I will still treat that as what? I will still treat that as my income alone. This is the takeaway so far. Now my point is, ma'am, if we treat income this way, how do we treat expenses? See, very simple. We treat expenses in the same way. So I don't worry about whether the amount has been paid or payable. I'm just going back to the previous slide for you guys to understand. Yeah. So I don't worry about what? I don't worry about whether the amount has been paid or payable, whether the expenses are incurred. If expenses are incurred, I will treat that as what? Statement of P&L expenses. Paid or payable, it doesn't matter to me, as good as your income concept. So I'll take you guys an example for an understanding. Imagine I'm a tenant. Yeah. So I have monthly rent that I have to pay, $1,000 per month. Now from 1st January to 31st December, how much I have to pay? I have to pay $12,000. Let's take for an example that I did not have money, in that I have only paid, let's say, 9,800, right? So now how much is payable, guys? Due to which my payable would be how much? My payable would be 1,000, sorry, it is going to be $2,200. So now this $2,200 will be treated as what? Will it not be treated as expenses? See, no matter what, how much I will treat as expenses, no matter what, my expenses are going to be $12,000. Why? Because I have incurred, I have used the place for my, maybe for my any work purpose or any other purpose, which default it is incurred. I might have paid or payable, that's a different story. Have I incurred? Yes. Will it be considered as expenses? Yes, very much yes. Are you guys with me? Able to understand, I believe? Yeah. So this is about what? This is about accrual concept. The two key takeaways that you should know is what? The two key takeaways so far would be, your income has to be earned, received or receivable, doesn't matter. Imagine somebody gives you early money, but you have not earned it. You have not sent the goods, but they might have paid in advance. Do you consider that as revenue? Not at all. Similarly, you might have paid early, but have you incurred the expenses? No. Then we can't consider that also as what? That also as your expenses. That's about the accrual concept, which is one of the key concept which plays an important role in every single standard that you use in your FR level as well as your SBR level. Great, guys. Yeah. So let's move to the next concept. The next concept is going to be not so much uh, gives you a, so much headache. Why? Because there is a proper dual concept where we have done how to pass the journal entries, which is there in my playlist, where you can go ahead and go through how to pass the journal entry. It is learn a journal entry in 15 minutes video. So I will give the link in this video also. Like, better go watch it to have a better understanding. I'm just going to give you an overview here. So what is dual concept? This is also one of the concept where most of the standards are developed, or I would say the entire accounts is developed. What do you mean by dual concept? Dual concept is nothing but every transactional value. See, I'm not going to say the word transaction. Maybe your standard book says transaction, but people do get confused often, ma'am, if transaction values, like how multiple entries are coming up. So I always say, any transaction you take in an organization, any transactional values, any transactional values will have two effects. What in all those two effects? One is debit, another one is credit. Yeah. So one will be debit effect, another one will be credit effect. This happens through the concept of passing the journal entry. Again, as I said, please go watch the Learn journal entries in 15 minutes to have a better understanding of the entire dual concept. So because you do this, your assets will always be equals to liability plus equity, right? So this concept ensures that you're using the double entry system, so that end of the day, your statement of financial position, because of this, your statement of financial position is always tallied. What is tallies? Which always be equal to, my total assets will always be equal to liabilities plus equity if I follow dual concept. Okay, so dual concept can be achieved through the help of journal entries. Kindly go watch learn journal entries in 15 minutes to have a whole understanding how dual concept works. All right, so let's move to the next important concept, which is called as, which will be treated as, I believe it should be Prudence concept. See, most of the complicated standards are depending on this concept. Ma'am, what is complicated standard? For example, take IAS 37 provision. Let's say your leases. Let's imagine any complicated standards that you're going to go through. You can expect to have Prudence concept. See, Prudence concept talks about practicalism, right? So it says hold your horses in your organization. So this comes into the concept when you actually have to deal with uncertainty. Yeah, when you actually have to deal with uncertainty. What is uncertainty? Or when you actually have to deal with future events. See, future events are mostly uncertain, right? So if I tell you that after 2 years, some XYZ event is going to happen, you might not believe me. Next 1 week, I say there is a chance where IPL may XYZ team is going to win. You might believe me because the trends or the information that we will be having will have some kind of verifiability. But in the future events, it's always difficult to identify because there is uncertainty a lot. Correct. So now if I need to understand future events, prudence concept is going to come into your rescue. What it says, whenever there is an amount estimation which is coming up, prudence concept says very simple line which says do not overstate your, don't overstate your assets and profits. Yeah. At the same time, it also says don't understate your expenses and liabilities. Ma'am, what do you mean by this? I'm understanding somewhat, I'm understanding the statement that you're saying, but what exactly means by this? See, imagine in 3 months, I know probably I might have to incur some 10,000 rupees as an expense. Go consider that as an expenses today itself. So it clearly said do not anticipate profit. Some amount is going to come. You feel there might be a chance where the customer who never paid you is going to come back and pay. Wait until the customer pays. Okay, but imagine you might have to pay your supplier early. Go recognize that. That is what the prudence concept says. What do you mean by this? It's very simple. See, do not celebrate too early. Correct. So we have a concept in cricket. If you see most of the cricketers, they'll be celebrating too early. Maybe like in one ball, next one run might be required. They'll feel like, okay, we're gonna win no matter what. I'm gonna run, and it is already draw. Like, and then lose the wicket, goes to super over. See, it's a big deal to handle later, right? Similarly, in an organization, if you have uncertainty of future events, don't anticipate the profit. Wait until the profit happens. So it is like very, we have a good, in India, we have that cultural aspect as well. Don't, let the good things happen automatically. Don't wait for it. Yeah, don't hope for it, because later there is a chance where you might get little problematic. Like if the hope, if what you want and that doesn't happen, there's a chance of you getting a little depressed in your life, right? So do not hope. Similarly, do not anticipate profit, but do anticipate loss. Yeah, what is but do anticipate loss? See, if you have any threats, go recognize today. But if you have any profit coming in, wait until the profit comes. That is what the prudence concept says altogether. I hope you guys are able to understand till the time of prudence concept. See, the moment the prudence concept is done, most of your concepts are over. Yeah. The moment prudence concept is done, most of your concepts are over. Then see, for example, these are all the examples of your prudence concept which is going to help you right now. But to be honest, since until then you read IAS 37, you'll have no idea what is provision for bad debts, or until then you would have read something in your financial accounting, you will not have an idea. At the same time, inventory valuation, as long as you have studied IAS to inventory, you'll be able to understand this. If not, it's okay. Even the third concept, it is based on IAS 37 provisions, which you might not be able to understand right away. It's okay. Like when you go to that chapter, you guys will have an understanding that how prudence concept is going to help you. You can just put a pause and just make a note of it if you really need. Okay. So then comes few concepts which is not so important for you to remember, but you should know. So what are those concepts? See, I'll come up with two more concepts. One is going to be substance over form. One is going to be substance over form. What do you mean by substance over form? Let's take 25th March 2025. We are standing. Imagine we are going back some days. First, or we'll keep 3rd April. Let's say 3rd April 2025. Imagine the building registration is going to happen on this date. The building registration is going to happen on this date, 25th March. When you want to close your books of accounts, looks like 90% of payment has been made. Payment has been already made. And payment has been made. And necessary construction work started. Building, let's say you have bought a land and construction work started, or you have a building you're doing renovation for your own office purpose. So now, when I say 31st March 2025, that is my year ending. Should I consider this book or not? Should I consider this building or not? How many of you say yes? How many of you say no? So few people will say yes, ma'am. Few people will say no. So those who says no, I know why you say that, because ma'am, the title of the asset is not yet transferred to what? Not yet transferred to the company. Maybe we are not supposed to showcase this as a asset in books of accounts. But think from a point of the you know commercial substance over the legal form. See, if the registration is going to take place after 6 months or 3 months, I will tell you guys to follow prudence concept. Do not overestimate your assets. So better not to go ahead and recognize. But here it is not so uncertainty. So prudence concept cannot be applied. Here where comes the new hero, which is your commercial substance. Commercial substance. See, commercially that building belongs to me. Over what is form? Over legal form. So legally maybe I'm not the owner, but you look at this, I have already paid what? I have already paid the money, isn't it? Yeah, I have already paid money and I have already started my construction work. More or less this building belongs to me. And you should know the accounts, whatever we prepare, we don't prepare on a very same day of the finishing of our year ending. It will take some time. So by then we get to know whether the registration has happened or not. So you follow substance over form and then say that this building actually belongs to me for the year ending 31st March 2025. So this is how the conceptual framework works. So there's another concept called materiality concept, which will be covered in the part of qualitative characteristics of your financial statements, which you can see another video. But the important concepts that you have to know is separate legal entity concept, matching concept, accrual concept, and prudence concept. And dual concept is very, very important. Dual is going to be one of the things which is going to save your life in ACCA. And substance over form. The seventh one is materiality concept. As I said, it will get covered in the qualitative characteristics of your financial information, which you can see in financial accounting playlist. So that is all about the overall your conceptual framework. So anybody who is having a question, you can of course go ahead and put it on comment. As soon as I see the comment, I'll be responding to that, guys. And if you need more updates and you want to know the live classes of financial reporting or strategic business reporting or financial management or let's say taxation, those papers that I handle, you can always inbox DM me on my Instagram, which you can see the link. So any doubts, put it on comment box. For now, I would like to say thank you for patiently watching this lecture, and I hope I'll meet you guys in my live class, and we will have a good session on FR. Yeah, thank you.